Hi, Alex and Chad with Dwell Capital here. We're going to be talking about multifamily, CPI, rising interest rates, and what that means in multifamily.
Yeah, so as you all know, there's a lot of things that are happening right now in the stock market. Also with the inflation is going up, and also interest rates are affecting us drastically. As many of you guys know that Jerome Powell raised interest rates last month, 0.75%, and there's anticipation of coming up here in December that they're going to raise it another 0.5, right? So last month's readings, there is still 7.7% inflation right now in the CPI, right? Consumer Price Index. Powell's goal is to get it down to 2%. Okay, so you've seen last month that the markets went up on this. You actually saw interest rates come down a little bit because they thought maybe they were going to do the Powell pivot, is what they're saying, right? That he might taper off on raising those interest rates just because some of the things that we're seeing in the market now, that we are starting to get over that hump and start coming down a little bit on that inflation, right? And I think the markets and people are just still getting a little ahead of themselves when they see that, because they say, hey, inflation's coming down, interest rates are going to go down, things are great, let's go back to the good old days, let's start buying stuff, right? That's not exactly what is going to happen. But it's great that we're coming down, and but we have to remember that Powell's goal is to get inflation down to 2%, okay? And that's going to take a little bit of time, right?
And you said we were at 7?
We're at 7.7% right now, and we have to get down to 2, okay? But some of the things that we're seeing in the market that isn't reflected in those CPI numbers is that I like to follow the container freight index, and that shows a global freight that you ship stuff across seas. Those are actually coming down, right? And actually at these places at the ports on the coast, they're actually giving these containers away for free. Because they have so much of them, right? And demand is not there. So consumers are not spending as much, right? So people are not shipping as much things. Also, we've seen an uptick in car delinquencies. They're actually up 1.85% this month. And I didn't even know this, Alex, but I found out that during the pandemic that you could actually, for your car loan, they had some type of programs, you didn't have to pay it, or you only pour part of it, all this. Well, all that stuff is falling away, and it's like, hey, now you got to start paying up, right? And the other thing that people forgot too is that during the pandemic, nobody paid for their student loans. They haven't been doing this for over 2 years now. Well, come January 1st, you're going to have to start paying again.
Bills are due.
Mm-hmm. So there's going to be a lot more expenses for the consumer out there that they haven't had, and now they're going to start spending more. And now I think coming into December, January, February especially, the inflation CPI is going to start coming down a little bit, right? And hopefully Powell will start to reducing the amount of interest rates that they're going to be doing. But again, let's not get excited too much because we have to get it down to 2, and we got a long ways to go. But it's great news because we want Powell to rip that Band-Aid off, right? We want a quick, let's get them up there, let's recover, and let's get back to the good old days when things are going good, right? So what are some things that we're seeing right now in the multifamily that you saw?
Yeah, so this fall we had a couple deals that fell through. Sellers still think that their product is worth what it was when interest rates were low. We know that's not the case, right? When interest rates come up, it costs more to borrow. We're going to have to bring those prices down in order for us to justify purchasing those. So I'm waiting for those prices to come down. When that happens, I don't know. But that's what we're hoping for.
Yeah. Yeah. And there might be some things coming up next year or the next year after that. I mean, some of these syndications, they were getting bridge loans, right? Yeah. And bridge loans, they were getting them for a 2 to 3 year span there, a term, and then a lower interest rates. And so what they do during that bridge loan is that they take that money, they get really cheap money, they bring up the NOI, they renovate these units, get them up there. Well, now all of a sudden, hey, now we have to refinance into these higher interest rates, right?
Sure. And your numbers don't work.
Numbers don't work. So instead of these investors and syndications promising you, hey, we're going to double your money, now it's like, hey, now we might need to do a capital call. because we got the higher interest rates, right?
Or do you sell your product?
Or do you sell? And that's what we're hoping that we can snatch up some of those gems out there. So, we are actively looking for properties right now, waiting for them. It's a little frustrating because these guys just don't want to sell them at what they're worth right now with higher interest rates.
What are you seeing for cap rates right now on the open market?
Yeah, they're still at that 4 to 5% cap rates, and that just does not work when you're having 6.5 to 7% interest rates. Sure. It just I can't make the numbers work. Even if you have a great value add property. So we're still waiting for them to come back down. But I do believe there's going to be great opportunities out there.
So hold on to your money?
Hold on to your money, yes, because we are going to find some great deals out there. Yep.
Awesome.
What are you seeing, Alex, in the for rent? Any rent increases or softening or anything like that?
Yeah, so we are, this spring we saw a pretty legitimate jump, depending on the unit type, anywhere from $25 to $100 a unit. We saw increase in rent, which is great. During COVID, that there was really kind of a leg in that. We had 2 years basically where we were just trying to keep our units full, right? So we didn't do any rent increases. So it was kind of some leg there. We got the rents coming up. We are seeing a dip back down in rents again. So, coming into the winter months, of course, being here in the north, people don't like to move when there's snow on the ground. So we do usually see a dip in rent prices. But this spring, depending on what happens with interest rates, the CPI, what that all looks like, we're unsure. I feel like we may see a little bump in the spring because we always do. Probably not what we saw this last spring, but we are looking for a little rent increase, hopefully 1% or 2%. And then we'll have to see what happens with the economy.
Well, the good news is that we're waiting for these rates to come down a little bit, or we're waiting for the sellers to come down on their price. And we're ready to buy. We're just waiting for them great deals to pop up. So I do truly believe that if we can make the numbers work with these higher interest rates, we're going to be sitting very good here in 2 to 3 years with those ones that we purchased. So we're just sitting back and waiting for that opportunity.
Do you see in 2 to 3 years the economy on another incline again coming out of this forced recession that the Fed keeps talking about?
Right. We're going to have a little bit of pain here, probably 2023, but I think we'll be coming out of that pretty decent. So going into 2024, I do see the economy coming back. Those interest rates will hopefully be a little bit lower. And I don't not say we're going to be off to the races again like we did. Inflation was not good back then. We had to do something about this, right? We can't be having home appreciation going up $1,000 a month, right? We had to do something about it. It's just not sustainable. So are we going to have low interest rates again at, 2-3%? I don't know. It's going to take a while to get to there.
Sure.
But maybe the new normal now is, that 5.5 mark, which historically is
good interest rates.
Good interest rates, and they're actually still a little bit lower than historical. So if we can get back down to that, it would be good for the economy and good for housing. So, yeah.
So in the meantime, we'll just hold tight and keep waiting for those deals.
Yep, exactly.
Hey guys, thanks for tuning in, staying with us. If you ever want to reach out and talk about what it is that we're doing or what we're seeing in the market, we'd love to connect with you and touch base.